leaving is what happened there? There's an echo now. What happened there? Hold on, I'm sorry. Huh. Is it echoing
I don't know. It
everywhere?
just came out. I hear it.
No, I hear the echo. Sure. I think you must have turned on your speakers.
I didn't. Oh, maybe I did. Ah, there it is. There it is, guys. Sorry about that. I did. I must have hit a button on my speaker. Sorry about that, everybody.
Wasn't me.
So what happened? Yeah,
It was
Jim. That's my great technical difficulties. So what happened was, while we knew that she was applying for jobs, she had 2 cities that she pretty sure she was going to get a job for. She got the job last week, so now we kick into gear. We're focusing on finding a top-notch Chattanooga
realtor that really knows that area really well, because they prefer to buy a house right away. But one of the things that's hard when you're moving to a new area is making sure that you like the area that you're moving to, because you might move to, who knows, maybe the traffic really stinks and you want to be on one part of the town versus the other part of town. Or like here in South Florida, if you're gonna
buy something more affordable, you might be moving to Palm Beach County. You might be moving to Port St. Lucie while you're commuting to Palm Beach County or Broward County, and you want to be close to the Turnpike or 95 so you can get down there super quick, right?
Yeah. A lot of things that your local agent would know about, right? Like you have kind of in your head, someone could tell you, hey, I'm going to be working here. We're looking for this. You would know, okay, I got a couple areas in mind, which I think are good. So local knowledge is super critical and very hard if you're not local to know that.
Exactly. So we're going to try, and if they have to rent, it's going to be okay. They have a ton of equity in their house, so they're going to put a super big down payment on their next home. This is happening a lot. I've seen, this is probably my 5th or 6th family in the last 9 months that are selling and moving out of state, and they're going to take the equity from the house here and put a gigantic down payment on a more affordable home in a different part of the country, which is exactly what the Northerners are doing with us, right?
Sure.
They're buying a more expensive property, coming down here, buy a less expensive property, huge down payment, if not cash, and moving down here. So everybody's kind of jockeying for position now. It seems like all across the country, this is still an affectation from COVID, but people are still doing this. But now it's more not lifestyle. It's more about affordability. That's the one thing I'm seeing is difference. Before, a lot of times it was lifestyle. I want to live in a free state, or I don't want to have these super high taxes in the state I'm in.
Right.
And I'm coming down here. I want the weather, that kind of thing. Now it's more like, I really am tired of the homeowner's insurance down here. I don't know what's going to happen. Everything's so expensive. They also talk about congestion. People are feeling like this is a different lifestyle than when they're accustomed to, and they've just watched it grow and grow and grow. So
it's so funny on that. I haven't, I moved down here from Northern Virginia, late 2005, Jim. And I still haven't run into the congestion that you had that I left.
Yeah.
Up there, right? Like here we are, almost 20 years later. And I still, so when I hear congestion still, I'm like, huh? But of course I work from home a lot, right?
Yeah,
so I'm not really out there.
You're not in the rush hour traffic.
I'm not out there in the rush hour.
I've been very busy in the morning lately, meeting with customers in the morning, which is not normal. Most of the time I leave later in the day because they work. But man, I've been going to rush hour traffic now. I'm dealing with rush hour traffic, and I'm like, wow, I don't remember this. I remember, and it isn't horrible, but I really feel like South Palm Beach County is looking more and more like Miami every day as far as the traffic. When they put that overpass for Spanish River Boulevard and Spanish River and Yamato, is it? Or Spanish River and Glades, I think. But when they put that overpass in, and you could just tell that they're going to start turning the highways to make it look more, it's going to be more like Miami traffic.
Huh.
And I'm really not looking forward to that. I'm so blessed to be living in the north part of the county. Mike, you live in a pretty good area where it isn't too bad, right? Unless you're doing rush hour.
Yeah, nothing super noticeable for me. I guess, rush hour, you're going to have more than non-rush hour, but nothing crazy. But it sounds like the house you're about to list is also in my neck of the woods.
It is. It's in the acreage. I forgot to tell everybody that.
The locks or the acreage?
64th place.
Which side of Seminole Pratt?
It's just barely on the west side.
So locks,
Yeah,
yeah,
locks.
definitely
Yeah.
locks, but sounds pretty desirable. Is
Yeah.
what's the inventory like?
It's like 2,000 square feet. I think it's 28 under air. The inventory is kind of low. At 585,
You said
585 with the pool,
4 bedroom, 2 car garage with a pool?
3 bath, right?
Yeah,
With the pool under $600,000. This
pretty
is a
nice
very good
Beautiful,
deal.
on a big lot.
Yeah.
beautiful sounding house. Hey,
Yeah.
yeah, a super big lot too.
Yeah, and a nice lot, no neighbors. The neighbors are pretty far away from you. It is on it's on a unpaved road. That's sometimes an issue for people. They could have pushed the limit and put this price higher, to be honest with you, to put it on the market higher,
Yeah.
but they're trying to be very reasonable because they want a buyer right now. And they're not desperate by any means. This isn't a desperate number either, but it's a very realistic number where people that are serious that they want to buy a home, this is a home they should look at.
Right.
So if you're interested, of interest about this, give us a call. And congratulations to Jen and Jason. But wait, there's a step even farther. Not
Wait,
only,
there's more.
yeah, the wait, there's more. Not only were you helping them find an agent up in Chattanooga, but Mike is probably going to be able to close their loan up there.
Yep.
So how did that work, Mike? Explain that because now when you first started, you were only in Florida and Georgia, I think, at the time when you first came to the show.
I don't even know if I was in Georgia at that time,
Okay.
but yeah, so I started with the mortgage firm in Florida, and when I started, I think the mortgage firm was probably only licensed in a few Florida and maybe a few other states, kind of traveling north, just kind of based on where they were able to find branches looking for to come on with a lender.
Mhm.
And so as the mortgage firm has expanded its territories where we operate, I'm able to kind of pick and choose if there's any states that I want to get individually licensed in. And so just like through the years, as I have had opportunities to do loans, and I wouldn't just go get licensed in every state because I really don't have business, right? But as things have come up, right, where people are relocating, or I have maybe there's friends or family or something. So through the years, I've expanded my own individual licensing to Georgia, South Carolina, Virginia, Colorado, and I'm about to go to Tennessee specifically for this loan, but it opens up the doors to do any loan in Tennessee,
Right,
right? And
exactly.
so I there's enough time for me to get individually licensed. It's not difficult, right? I've got all the credentials. I just got to jump through a couple hoops, and I'll be able to help them up there. Which I'll at least be in the ring, throw my hat in the ring to help them, right? They
Yeah.
wouldn't have to use me, of course.
No, of course not, but, they have a track record with you. So, this will be a great
Yeah,
opportunity.
we had a great conversation. I don't know. You want to talk about like so when you're relocating and you need a mortgage to buy your new home, number one question, the very first question, the one I'm sure the one that comes to mind for you is, what's your income going to look like?
Mhm.
And a lot of people, for whatever reason, they haven't come across that concept. So just the layperson, right, the average borrower, they're like, yeah, I'm going to get a job over there. So I'm going to get a job in my same field, Timothy. I'm going to be making the same money. Well, that's not, you can't do that, right?
Right.
Like, of course you could do that, but depending on the job, depending on how you're paid, you might have to get the job and get some time under your belt before you can qualify with that job.
Yes, and on top of it, this is the concept because I get them before you get them normally, right? So I talk to them first
Yeah.
most of the time. So what happens, this is what they're thinking, right? And it kind of makes sense. They're thinking, I got this gigantic down payment.
Got a
It's
lot of money.
usually way more than 25% down to what they're trying to do because they want the smallest payment possible,
They
right?
got a great payment history on their current mortgage.
Yeah, they've had right. They've had a house forever. They're used to making mortgage payments. They're thinking this time I'm putting a gigantic deposit down compared to last time. How could I not get a loan? Right. And then they find out that, oh, there's still employment requirements and income
Yeah.
requirements.
Yeah.
And the other thing is if they're going up there and becoming self-employed or something, that's a whole nother issue,
Oh boy. Yeah.
self-employment.
It's just another one. I mean, the basic question is, where is your income? Where does your income come from now? Where is it going to come from up there
Mhm.
or down there, wherever you're going, over there, right? Wherever
Right.
you're
Sure.
relocating
Sure.
to.
Yeah.
So if you're self-employed, the question is, is your business going to be impacted by your relocation? Sometimes the answer is yes. Sometimes the answer is no.
So let's say they were working from home and all they're doing is they're moving their office and they're still working for the same, like
Yeah.
still doing safe employed, but they're subcontracting work and it doesn't affect them at all, then that's not
Absolutely.
a
Then
big
you
deal.
can not a big deal, right? You have to have that. If you're even a W-2 employee, but you're a remote employee, and your employer basically
Mhm.
says, "Yeah, you can work anywhere. It doesn't matter." Great, no problem.
But
Um,
if you're
if you're
self
an auto detailer,
Mhm.
okay, let's say they have a self-employed auto detailing business, and it's a one-man show, and so the business is coming with you, and yeah, of course, you're going to work up there and you're going to make money, but you have no established
track
track
record.
record of making money in that location. So that's a problem.
Mhm.
If you're switching jobs, you're going to get a job in a similar field, but you're switching jobs. You got to
Mhm.
get on the job up there. And depending on how you're paid, you might have to be there, 1 month or maybe 6 months, right?
Mhm.
Depending on how you're paid. Um, in the case of Jen, she's yeah,
Yeah, it's
she's
okay.
a
She's a
teacher
public
here,
school
right?
teacher.
Palm
Yep.
Beach County, and she's
Mhm.
going up there to Chattanooga County, whatever it is, and she's going to have an employment contract. Perfect, golden. She gets a contract. Now, if she was a salaried employee, but in a field where she wasn't getting a contract,
Mhm.
she would need to get on the job.
And how long do you think she would have to be on the job?
If it's salary,
If it's
1 month,
salaried,
1
1
month,
month?
yeah.
Okay.
It's kind of like before closing, we want a couple paychecks in the bag.
So this is, like, really important stuff to
Yeah.
know before you start the process, because you can jam yourself up pretty bad and, be caught, like
I mean, there was another LO in my office, and it just pains me to like say that experienced LO had the conversation. The borrower was like, "Yeah, I'm a federal employee, right? So I
Mhm.
can go anywhere I want." Well, when it came down to it, his employer didn't know anything about him relocating, and in his mind, he's like, "Well, I'm buying in Florida as a primary because I'm going to be retiring here at some point within
Mhm.
the next couple of years. I'm retiring. I want my house down in Florida." No, but sir, are you actually relocating right now? Oh no, I'm gonna stay on my job up here. And it's like, well, it doesn't work.
Right.
It doesn't work. And so yeah, I said that before. It's amazing how many times I've come across where the loan originator, like they're out there with the pre-approval, and whoever took that pre-approval, and I think we wanted to talk about something about this, Jim, when like later on in the show, when you're assessing pre-approvals, what are the things that you're looking for as an experienced agent? So people be out there with the pre-approvals from some national lender, and they're relocating, and those questions haven't been asked. So it's a recipe for disaster. It's
Yeah, it
just
is.
like it's contra to what we want, which is to close.
And over the 11 years, because this radio show had such a big reach over the time that we've been on the show, you and I have dealt with people that have either come in from all over the country or leaving here and moving to all over the country. So we've created this system. Thank God for the Keller Williams being part of the Keller Williams group. There's 200,000 agents of us all over the world in 64 different countries. Most about 180,000 of them right here in the United States. So we can actually get in there and find the top agents of any region you want to be in. And not only that, we can actually narrow it down to top listing agents, top buying agents, so that we really can narrow down what you're looking for. Now, I just did this for John and Katie just recently. John and Katie, really big fans of the show. We've done a couple of with them in the past. We just closed a deal with them, I think, either early this year or late last year, and now they're looking for some land in Lake City. I went and searched and searched and searched, and to be honest with you, I couldn't find the top Keller Williams agent out there that was gonna be the one. So we had to place him with a different agent from Caldwell Banker. But that's one of the things that we do is we go out there and vet these people, because one of the things that's weird when you're moving to a new area, you don't know the area very well. You really don't want to rent if you don't have to, because there's a lot of expense renting, because you have to move twice. You got to usually keep stuff in storage. Then
Yeah.
you're going to be paying for the rent, which is taking a lot of the equity that you've got from the house and now spending it on rent. So it's much better to become a home buyer. But then the concern is, well, how do I know I'm buying in the right area? And so some people decide I'll I'll eat the cost of renting because I want to rent for a short time, so I really get to feel the area first. There's nothing wrong with that as long as that's your plan.
I think if it were me, I would probably do that.
Yeah, I could see you doing that. I could
Yeah,
definitely
like
see
this.
you
I,
doing
I,
that.
I don't want to pull the trigger and have. Although in the past, I moved down here to Florida,
That's right.
kind
You
of
kind of moved blind down
sight.
here.
Well, we did new construction when we came down,
Mhm,
so I was forced to rent while the home was being built.
mhm.
But we, we
Yeah,
picked our area kind of sight unseen. Now, luckily, we were in Royal Palm, so it was a great,
yeah,
it worked out just
good
fine.
pick.
Beautiful
Yeah,
area.
yeah.
So yeah, so the thing is we can help anybody thinking, hey, that's exactly what I'm doing. I'm moving from Florida, I'm moving to Georgia, I'm moving from Florida, I'm going to Tennessee, North Carolina, South Carolina, wherever in the country. We're going to be able to help you go through that process, and we're going to take you step by step, not just, hey, love to sell your house, see you later, and wave and bye
Sure,
bye.
sure.
We're going to be saying, what's your next move, and how can we help you there? And give you advice about things that you don't even know. There's a lot of times that you don't even know what you don't know until you sit down with the professionals.
What are those? The known knowns, the known unknowns, and then the unknown unknowns.
Mhm.
Remember that?
Because
That was
everybody Donald
yeah.
Rumsfeld.
Don Runsfeld said
Yeah.
that. The
Yep.
unknown unknowns.
Yep.
That's great.
You know the
It
thing
makes a lot of sense.
Mhm.
it does. It make a lot of sense, but I think he was saying that right at the time that they said that we had the do you remember when he said the Department of Defense was missing billions and billions of dollars that was just disappeared and they didn't know where the money went? And then
That's pretty
nobody
topical.
and then we had some event, I don't think it was 9/11, and then we never talked about it again. It was so weird, and it
I
was
don't.
right
Yeah,
around those unknown things. It was pretty wild.
I don't remember that, but I mean, billions missing. That's
Yeah,
happening right now,
yeah.
right? You heard that?
Billions missing? No, where?
It was something about
I didn't see that.
the budget for aid to Ukraine,
Mhm.
where there was
Oh,
3 billion that they thought they had spent, and they're like, "Oh wait, we still have this for aid." Right? It was like big surprise. Hey, we good news is we got more money. Bad news is we could have given it to you earlier.
what
Type of thing.
Right,
what I
right.
remember I read about the Ukraine war a lot because 'cause I'm very interested in it, so I read all aspects of it, all sides of it. Um, I even I even read some of that RT news group stuff, which is just, propaganda.
Okay.
But I read all that stuff, but you know what I found is it seems like we see the US all the time saying we're giving X amount of billions to Ukraine, X amount of billions. It's happened so many times. But I don't think that one of the things I learned was is just because they allocated the money for them, they didn't just like cut the check right then. They don't get it right then. So they have a lot of money that's already been approved, but they might not have released yet.
Yeah,
You
I
know what
think
I
this
mean?
headline, I just kind of like glossed over it, but I think the headline was 3 billion and found in the budget that they thought
What's
they had
3
spent.
billion, right? 3 billion. It's like
Between
picking up
friends.
do you even pick that up off the ground when you see it on the floor, $3 billion? I wouldn't even bend down to pick it up, right? Unless the dollar head sign was up, unless the Benjamins
Then
were
it's
on the
lucky.
upside, then it's lucky I
This is
pick
my
it up.
lucky billion.
If it was down, forget it. I don't need the 3 billion,
Who
right?
is on the $1 billion bill?
Yeah, exactly, exactly.
Well, it's got to be President T.
I'm sorry, I'm trying my
Oh,
eyesight.
okay.
Wait, let me see here. Hold on.
Hey,
Tru-
Jim, real quick, just
Truman?
before we move on,
Yeah. Okay.
before we move off the thing you had mentioned, like borrowers that have the conception is, hey, I got a big chunk of money, I'm putting a big down payment, it's very low risk, therefore approve me for the loan. So just to get back to it, and the reason you talk about income is you still, regardless of how much you're borrowing in relation to the value of the home, it's still a loan and there's still a payment obligation. So you have to qualify to make that payment. So that's it. It's
And
standard debt to
then
income ratios. There is a payment. You have to qualify per the normal guidelines qualifying for payment.
And one of the things that's really great about Jen and Jason, Jason's going to go up there and get a completely, probably a different career, most probably, right? But because they're putting such a big down payment on the house, they only need Jen's income in order to qualify for loan, I'm pretty sure.
Yeah, and that was one thing we talked about. So Jen's income is the type where she's going to have an employment contract, which is golden. Like that's
the
that's
best
the
of the
golden
best.
ticket.
Yeah.
And Jason is not in a field where even if he were doing the exact same thing, it's not the type of job where you get a contract.
Right.
Right? It's just like, hey, where you're hired, start working. So if they needed his income, then he would need to get on the job. And I think in this case, she's going to not they're going to not need both of their incomes to qualify for the resulting payment. So it's going to work out for them.
And then we just did a deal with Matt and Lisa, and they moved from Royal Palm Beach about 3 months ago, and they moved up to Massachusetts. Now, they didn't end up using us for the real estate stuff up in Massachusetts because they have 3 relatives that live in Massachusetts that are realtors. So
That helps.
And they lived there. So they lived there for many years before. So they knew the area really well. But what they ended up doing is they got an Airbnb for 30 days, right? So they rented an Airbnb, they put their stuff in storage, and they got an Airbnb because they had dogs. And they stayed at the Airbnb for 30 days while they were looking for their house. It was a little stressful. I kept in touch with them the whole time. They went into contract. I think they haven't, they might be closing like right now. But I talked to them 3 weeks ago. They were in contract. They were very, very happy, but they were running out of Airbnb time and they weren't in contract on their house and they were getting a little nervous. And they called while they were home searching. I don't know if you remember this, but Matt called us while they were in the process of home searching. And he said how
Oh.
different it was up there compared to down here when you were selling your
I
home.
remember he called. He said you set up open houses down there. You don't go to individual appointments. It's only through open houses.
Only through open
and
houses.
there's like lines.
Yeah.
Yeah.
And it was pretty crazy. And I didn't really think that the market was that hot up in the Northeast, but apparently a month and a half ago it was super hot up there. So if you're thinking that you're going to be moving out of the area and you want to have a plan to where you're moving to for next, you got to think about us. We're the one-stop real estate shop. We've got your mortgage information with Mike Rauch. You got your realtor information with me, Jimmy D. Right? We've got Ross Camarinets that could help you with homeowners insurance selling your house down here. Okay, not up there. I don't even know if Brightway is nationwide. Is that a nationwide company?
I
don't know.
I thought so.
I think they are, but
Oh.
I don't know.
I have to talk to Ross about that when he comes on next week.
I thought he
And-
mentioned that a couple weeks ago. That's the only
Right.
reason why it's jumping out at me.
and
Anytime I talk to Ross, he mentions Juno Beach.
Yeah, the Juno Beach one.
Juno Beach. That's the only one that matters because that's the one
Juno.
Ross runs. And we also have title work if you have any title issues. We've had a lot of people lately that have needed Paul Krasker, the law office of Paul A. Krasker, for some real estate stuff to negotiate some things. We've had him review contracts for customers that were either buying new construction or we needed to negotiate things with a buyer-seller contract, just a regular deal through 2 investors. And we needed legal advice. So we went over to Paul Krasker. We have all of these people at our fingertips. And that's what makes the Florida Talk Real Estate Show and the team, the one-stop real estate shop, so special. You make one phone call and you have all of these people, all these different professions at your fingertips. And we're not just talking anybody. We're talking about people that are local business people working for local businesses that you could pick up the phone and actually talk to them. And you could actually walk in their office and say hello and see how they're doing and not just be a number on an 888 line. So we're there for you every step of the way. So if you need that, please give us a call. We're going to take a break right now, Jimothy, if
Okay.
that's all right. Is
Sounds
that
good
about
to
right?
me. Yep.
And on the flip side, we're going to start talking about, we've been saying this for 11 years now. The Florida real estate market can be tricky, and it's not any less tricky right now. So we're going to talk about the tricky real estate market and the economy and what's going on with that next.
We'll be your friend. Follow us at Real Radio 92.1 on Facebook, Instagram, and Twitter.
From the Gordon and Partners Weather Center. Have you or a loved one been injured through no fault of your own? Call 561-333-3333 or go to fortheinjured.com.
I'm meteorologist Jennifer Collins with CBS 12 News. A mostly sunny sky today as temperatures return to the upper 80s and lower 90s with a chance for afternoon showers and storms, mainly inland. An east wind between 5 to 15 miles per hour. A stray shower tonight, still warm into Sunday morning with overnight lows in the 70s.
This report is sponsored by Bank of America. Bank of America has powerful digital solutions for local and global businesses, so you can make every move matter. Visit bankofamerica.com/banking for business to learn more. Bank of America, N.A. Copyright 2023.
Hey, it's your boy Johnny C here, host of Florida Talk Real Estate. They're tops when it comes to helping people buy and sell houses. But Florida Talk Real Estate is so much more than that. For 5 years, I've watched these guys help thousands of our listeners with any real estate need. They couldn't do it without their sponsors, who are experts in their fields. Check it out. Jim DePola, powered by Keller Williams Realty. Their team specializes in helping people sell their house for top dollar, and buyers get great deals on the purchase of their home. That's what they did for me and my family, and I couldn't be happier that I hired them for my real estate transaction. Mike Rauch from the mortgage firm is one of our favorite guests on the show, and he is the mortgage guy. Whether you're looking for a refi or a mortgage to purchase a new home, Mike Rauch will get you the answers you need. The mortgage firm is licensed to do loans in Florida, Alabama, Tennessee, and Georgia, and they have local offices that cover all of South Florida. So if you're thinking about a refi or a new mortgage, go to the mortgage guy, Mike Rauch, and find out what he can do for you. The Mortgage Firm, Inc., NMLS 189233, Florida license MLD 78, equal housing lender. The law office of Paul A. Krasker has been specializing in real estate law for nearly 25 years and has the professional team you need. Upside down with your house, Paul's team can help you conduct short sales, loan modifications, even if you're behind on payments. They also help you with foreclosure defense and bankruptcy. They can even help you get a student loan modification and repair your credit to get the score you need. Paul's full-service team has helped thousands of our listeners, and they can help you too. Trident Title LLC is the largest privately owned title company in Florida. When you need a title company to complete a refi, home purchase, or sale, Trident Title has got you covered. Not only do they offer competitive pricing, Trident Title has attorneys on staff to make sure if you have bumps in the road declaring title that you can get the job done. Beware, not all title companies in Florida have attorneys on staff. Trident Title does and complies with all the new federal regulations released last year. Ross Camaronets, owner of Brightway Insurance, has been helping our listeners get great rates on homeowners insurance plans. Haven't checked your homeowners insurance policy in a while? This is a great way to help reduce your monthly mortgage payment. Ross can also help with renters and auto insurance. Ross is only a phone call away and can usually get the answers you need same day.
Call Ross today at 561-425-6228 or drop by his office at 873 Donald Ross Road in Juno Beach.
So now you know why I'm happy to be part of the Florida Talk Real Estate Show, the longest running real estate show in Florida. And all these sponsors are just a phone call or a click away. Just call 888-973-7828. That's 888-973-7828. Or go to floridatalkrealestate.com. That's floridatalkrealestate.com. And don't forget to use the most accurate search engine to find your new home or ask for a free home valuation because floridatalkrealestate.com has you covered. That's floridatalkrealestate.com.
This is Real Radio 92.1 and 101.7. Real talk for the Palm Beaches and the Treasure Coast. This is Florida Talk Real Estate with Jim DePola and Johnny C. Got a question for the show? Call us live at 1-877-927-6969.
Hey, I'm sorry, I was messing around with something. This is Jimmy D. We are back, Florida Talk Real Estate, the number one and longest running real estate podcast in Florida. That's right. We've been on 11 years. Got over 500 hours of podcasts on our YouTube channel, our Facebook channel, on iHeartMedia app, and I think even on Spotify and Apple. I don't know if we have updated them, but they're all there for you with tons of information to give you. So check out. All you got to do is Google Florida Talk Real Estate. We're everywhere, so just check it out. Number one news provider and infotainment provider about real estate in Florida. We've got Mike Rauch here from the mortgage firm. Hey, Mike, how are you doing?
Good morning. Doing great.
And, of course, we got Jimothy, our producer extraordinaire. Good morning, Jimothy.
Good morning, gentlemen. And if you have a question or comment for the show, 877-927-6969. Get me busy here. I'm just standing here chatting with these guys. I want to do some work around here. Give us a call, 877-927-6969.
Yes, make Jimothy work for a living.
It's actually because it's just you and me, Jim. it's actually a good time to promote calls. Like if we don't promote them enough to like, hey, if you got questions, anything, does it have to be the world of real estate?
This would be. Let's
It's
try
helpful.
to keep it real estate
It's
related.
helpful. Okay.
Maybe people could get creative and come up with stuff that's kind of real estate, but not real estate.
Sure. Like a crocodile attacked me.
Or selling a
Right.
selling a spooky house.
Oh,
I've been waiting
yeah.
for that. It's only
Yeah.
been 6 years, guys. You've let me down.
You're probably the most guilty of bringing in topics that aren't really real estate related, but trying to make them, trying to tie them to real estate.
And I'm like Dano, who hasn't caught, what is it, the bonefish? Is that what they say? Dano's never caught, Timothy?
Right. That was a running joke.
Right, the running joke when Dano
quite a
was
while.
around. They used to say that he could never catch a bonefish. I could never get the haunted house.
There it
Yeah.
is.
I
That's
want
right.
my haunted house.
I thought it was a snook that he couldn't catch.
No, it was a bonefish.
Yeah, I
Okay.
think it was
Yeah, yeah.
bonefish. Everybody would make fun of him. And I want to sell a haunted house. I already have a TV series I've already created in my head about selling the haunted house. So anybody got a haunted house, I'm going to give you an awesome deal to sell your haunted house. Okay. So somebody give me a call.
Well, there's one surefire way to sell a haunted house, Jim, and that's to buy a haunted house and then sell it. So maybe you need to start by, I want to buy a haunted house.
There was one in Orlando about 4 years ago that I really wanted to drive up and see. It was on like 5 acres of property. It was this big mansion. And when I say a mansion, I really mean like the formal mansion that you would think of, right?
Like a southern.
Yeah, almost like a Biltmore, but smaller, but like that kind of thing, right?
Ah.
And southern, yeah, but it was southern with the colonnades in the front, with the front porch with the colonnades and all that.
Yeah.
And it was destroyed. There was a hole in the ceiling. It needed, hundreds of thousands of dollars of work. But I
It's
thought,
your average fixer-upper from like a horror movie.
yeah,
Type thing.
yeah, it would be like Money Pit with Tom
Yeah.
Hanks and Scream or something, right? And it was such an interesting property, and I was thinking if somebody could buy this and turn it into Airbnb, it would be awesome, right? Or like a retreat Airbnb. And I just didn't have the time and inclination at the time.
So the show is like flip this haunted house type of
Flip
thing.
this house, yeah, flip this haunted house. And at the end of the show, what I wanted to do is after we fixed the whole thing and we found the buyer to buy it, right? What I wanted to do is give them the option that we can bring in exorcists and exorcise the house from all the haunted stuff, or they could decide to keep the ghosts. And either way, I'm cool.
That's what
with
I'm
it.
saying. They
So
could
have a
really
choice at the end.
They could like dress it up as a haunted house. Like they could
Yeah.
play that up a little bit.
Yeah.
Yeah. Keep it
And I know
hospitable for the
I know for a fact
ghosts
that
and ghouls.
I know for a fact that it won't hurt the property value. It will hurt the property value for a lot of people, but there are some people that will want to buy the house just because it's haunted.
How do you know if they're good or bad ghosts?
Well,
Is there
that's
a,
what
way to find that
you
out?
bring in the paranormal experts in, because
Okay.
that would be all part of the show. We bring in the paranormal. And don't just try to make up that you got a haunted house, because that ain't happening.
Did you do air
wanna
quotes
some
around
research
experts?
on haunted house and see if it's really haunted.
Yeah.
Sorry, what?
Did you do air quotes around experts when you said that? Paranormal experts?
Well, let me tell you, I really, really wanted to do this about 3 or 4 years ago, and I actually started calling paranormal companies in South Florida to see if they knew anybody who wanted to sell a house because it was haunted. And oh my God, the conversations I was having with those companies,
Yeah.
like the people that were running them, that was a lot of fun. I should have just done a show on that. They're just talking to all these paranormal, because there's a lot of people that claim they're paranormal experts down here. I was surprised.
Oh, is there really?
I was surprised how many choices I had to talk to.
I'm surprised. You know what? Because isn't there a lot of that type of activity considered in the St. Augustine area?
Yeah,
I believe.
Yes.
And I know how much you like that area.
I do.
too,
I
you
love
know?
that area. 500 years of history. How can you not like it?
Yeah,
And they
it's
do the like the haunted tours,
awesome.
Yeah.
right? Where
Yep.
the ghost stories or whatever. I don't know, Jim. I think if you really wanted to turn that into a business, you could figure it out, right? Like you start with, just go
I'd
through
have
the
to travel
obituaries,
through the country.
right? You go through the obituaries, see if somebody passed away in their home. You go to that homeowner, you like start feeding them a potential, like, oh, this is possible that the ghost still inhabits, and then you just create your own haunted house
Mhm.
and then market it that way. No, no
I
good?
don't know. I had a house that wasn't haunted, but was pretty spooky. I called it the spooky house when I was selling it, when I was a flipper. and somebody had committed suicide in the house, and then the wife years later committed suicide in the house with the same gun, and then the daughter turned the house into a BDSM place because she couldn't afford the mortgage payments since the parents died. Then she lost the house. An investor went in to flip it. He went crazy in the process of flipping the house, became homeless, was living in the haunted house in a sleeping bag with no electricity, running water.
Wow.
Yeah, it was kind of crazy. So that house, I called it the spooky house.
Yikes.
We did okay with that house, though. We kind of cleansed it.
Timothy, stop
Hey.
that. He was looking for the laugh track.
Yeah.
No, for that story.
I see
Stop
that we have a caller on the air.
Actually, he didn't want to come on the air, but
Oh,
you
sure.
know what he would like is he would like the address to that house that you were talking about earlier that is almost on the market. That's out by Locks, you said,
I would
by Pratt Whitney.
I would love to do that. I'm not trying to be jerky or anything, but I don't have permission to do that yet.
Oh,
I can
okay.
tell them off air.
Okay.
Okay, so I have no problem. And I'm not trying just to tell them I'm not trying to do anything. It's just for legal reasons.
I'll grab his info and we'll give that info
And
to
I
him.
promise
off air.
I won't
Okay.
drive them crazy. And if
Okay.
that's all they want, we
Excellent.
can give them the information. Okay, but that's the if you're wondering and you're just coming on the show now, at the beginning of the show, we were talking about Jennifer and Jason, who are selling a beautiful 4-bedroom, 3-bath, 2-car garage with a pool and a spa on 1.14 acres out in Loxahatchee for $585,000. That's right, a perfectly fine 4-bedroom, 3-bath pool home for under $600,000. This house, I think, was built in 04, 06, so it's all CBS construction, right? So everything's good with the house. Great lot. So if you're interested in the house like that, please give us a call. Reach out. Jimothy will take your number, or you could just go to floridatalkrealestate.com. And if you want to talk to us off air, we'd love your calls on air. I'm sorry we have somebody shy, but on air, off air, you could always go to floridatalkrealestate.com, and there's a little tab at the top of the page called Chat with Jim, and you can actually set up an appointment live and check out what my schedule is and make an appointment, and we'll have a 30-minute session blocked out for you at the time of your choosing based on my schedule. So go ahead and try to click on the button, Chat with Jim, and we'll get you to anybody on the one-stop real estate shop.
Cool.
Let's talk a little bit about this tricky economy because, boy, there is so much going on with the economy. It's almost hard for me to keep up with everything. So in the last week, we had the inflation report come out. We had the Fed deciding if they're going to jack up the rates or not. We had the weekly mortgage update report for Freddie Mac for the mortgage rates for that. And a couple other more statistics. So let's now get into it. Okay, so first things first, the Fed raised the rates, Mike, for the bank. Now, the Fed Reserve raised the rates a quarter point. That's the 10th hike. That's the 10th hike in a row that they've raised rates.
10th quarterly hike.
10th
right?
Quarterly. No, it's the 10th hike. I think it's 10 months in a row now.
Oh,
they
it's every
started
month they
last
do
year.
that. Okay.
About 5.5, 6 weeks
Okay.
is when they do it, Mike.
All right.
So this one just came out last week. They raised it a quarter point. Everybody expected that to happen, but here's the interesting part. The Fed Reserve had told us when they started raising the rates last year that they wanted to get to about 5.25%. So Fed Reserve rate, a lot of people get confused about this. I hear it all the time. Oh, the Fed jacked up the rates. That means, and they think it means mortgage rates and credit card rates. That isn't what it means. It means the bank to bank lending, what banks charge each other when they borrow money from each other. That's what they're talking
Yeah.
about.
It's even the overnight lending rate. So it's the day to day, here's how much money you're going to pay in interest to borrow money from me at huge scales, right? Bank to bank lending.
Yeah, we're talking billions of dollars or hundreds of millions at least going back and forth overnight, making sure everybody's bills are paid. Now, here's the thing. We've been at zero for a very long time. And the plan was because inflation was so high. Now, back then, the inflation was almost 9.1%. So they had to clamp this inflation down. They wanted to get it to 2%. So they started jacking up the rates. Now we're at 5.25% for the Fed Reserve rate. That's the exact number 10 months ago or so that they wanted to get to. Now, what national economists were expecting a year ago was they were going to jack up the rates to 5.25. They figured it would take about this long for that to happen, but the prediction was that later this year, meaning the fall, they were going to start uh, lowering the Fed reserve rate. That's what the expectations were. I wasn't a big believer in that. And now there's a lot of concern that maybe they're going to do it, maybe they're not. Not everybody is confident about that anymore. So, a little bit more wonkiness about the Fed reserve rate to tamp down inflation was the Fed wants us to get us to 2% inflation. Now, the inflation report came out for April, and April's inflation rate was 4.9% for total core inflation. Now that's down from only 5% the month before. So we went from 5% to 4.9%. Not very much of a drop, but it is the 10th straight month that we've had a drop in the inflation.
Mm-hmm.
And I don't know if it's a coincidence, but we had 10 Fed rate increases, which is exactly what they were trying to do is increase, decrease our inflation rate. Now, the fun to make it more complicated is that even though that the core inflation rate now is 4.9%, according to the Fed's opinion of getting down to 2% for inflation, we're at 4.2% for the Fed. So even though core inflation nationwide statistics is saying 4.9, however the Fed configures it, we're really at 4.2. So we got to reduce it by half and we'll be where the Fed wants us to be. So we're not far away, considering that we were at 9% 10 months ago, but we're still pretty far off. So,
but they also want it to hold. Right. So getting there is one thing, but holding
they
there
got to
is the
keep
other
it.
thing.
Yeah.
So
That's true.
that kind of like makes you think, well, why would they, if they bumped rates to get the effect, why would they start lowering rates if they want to hold?
Exactly.
Which, it's like, so why would they do that? I don't see it. Like logic tells me that they're not going to reduce the Fed lending rate anytime soon.
And if I'm not mistaken,
but I could be wrong.
Before the crash in 05, 06, the Fed reserve rates were like in the eights, if I'm not mistaken. So we're even low compared to the Fed reserve rates from back in the day. So we're gonna.
I'm looking at the high September. So basically 2000, it was like 6.5.
Oh, it was okay.
Yeah, and then it started dropping towards 2004 when it got to its lowest. So like they lowered it. And guess what happened to the real estate market in that time?
Overheated the market.
It overheated.
Mm-hmm. Right.
Then they're like, what do we do? So 2005, they started increasing it down from a low of 1 up to, by the end of 2006, it was 4.5 again. And then, of course, the bottom fell out and they said, well, now we got to go back down.
Oh, I thought it was higher at one point. That's really good information. So I was incorrect about that. I thought it was a little higher during that last boom,
No.
which now even explains more about the boom because it kind of overheated everything. And then the banks, it was like the perfect storm. So we had the Feds keeping the Fed reserve rate low, made it easy to borrow. And then the banks had all these crazy mortgages where if you fogged a mirror, you got the loan.
Wasn't
right?
that more
So-
the problem though?
I
I mean,
would
during
think
the 08-ish
it was
or
free money.
07.
It was easy free money, so
Right.
people used it,
Right.
and everybody became an investor
Yeah.
when they didn't really know what they were doing.
And there was
Yeah.
also, I think there was, so rates were still relatively reasonable, like during that time. I don't know if you remember, if you were a buyer at that time, but they were probably anywhere from 4 to 6% kind of in that window of time. And so, but people were struggling with affordability because the prices were up. And so they were looking at these exotic ways of lowering your monthly payment with the anticipation that, I can refinance in the future. So an adjustable rate's no big deal, right? I can afford the payment now. And guess what? My income is going to get better in the future, Jimothy. So I'm going to, at this time, 2 years from now, I'll be making more money. And so when those stars didn't align for people, that's how they got in trouble. So they're getting these mortgages that got them into the lowest payment possible and qualifying based on that.
Yep.
Or fictitious income or whatever it was.
Mhm.
And then housing prices didn't continue to go up and job stability didn't continue to increase, or you know what I mean? So
Yeah.
people got stuck.
I remember there was a lady trying to buy a house I was flipping back in 06, right at '05. It was right after Wilma, though, so we were crashing. We were in the middle of the crash, but people didn't realize it, and this woman came to us. She worked part-time, making $15 an hour as a private nurse, and she got approval for a $325,000 house, working part-time at 15 bucks an hour.
There you
Yeah.
go.
That's crazy town,
Mhm.
So
right?
yeah, it's I guess to Timothy's point, yeah, it wasn't just the interest rate. It was the fact that the risk evaluation was so lax that, it was just
That
it was a
that's
pending disaster.
and that's the only thing that concerns me about this market. We've been in an up market for so long, and people don't really get this. Like when people look back now, even with the interest rates where they are now, this isn't a bad market. Okay, it could get to a bad market. We've had some bumps in the road, but we've bounced back. 3 months ago, we were selling 900 homes, single family homes in Palm Beach County. That's crazy town 900. We're usually at 1,500 to 1,800
Yeah.
with a high of 2,000, 2,100 would be like super strong, right? But to have half of that or less than half, that's crazy town. Last month, meaning March, the new report's going to come out next week for May. But in March, we saw a big jump and we went from 900 homes sold a month to 1,400 homes sold a month. We don't have any foreclosure rate. It's basically non-existent, 1% foreclosure rate or foreclosures on the market. Normal is 1 to 3%. So we're on the lower end of that range, right? So people are making their mortgage payments. Um, we're not seeing a lot of stress there right now. The other thing that's happening is unemployment rate. I guess we broke a new record that I didn't notice. Last time I heard unemployment rate was equivalent to 1969. Well, that's so a couple of weeks ago because now we're at 1953. The last time we had a 3.4% unemployment rate was 1953. Think about that. And that was right after the Korean, like maybe during the Korean War, but right after
Yeah,
World War II.
it was after World War II.
Mhm.
I don't know when the Korean War started, but
It was in the 50s for
Yeah,
sure, early
yeah.
50s. But so like we haven't had an unemployment rate this low. And refuting what Johnny's been saying for years, Johnny C, our host extraordinaire who's on vacation this week, he actually has mentioned for quite a while that the unemployment rate is BS. And a lot of people have been saying that for a long time. And I kind of agreed with Johnny and those people because I feel like the reporting wasn't accurate enough for the people that wanted a job but just weren't in the game to look for something. However, there was a report in 2019 before COVID that was predicting what full employment would be um, in 2023. So they were trying to do a 4 or 5 year projection. So they predicted that by 2023, we would have 154 million people employed. We have 156 million. So that figure tells me that, and then the article went on to say, we don't have a lot of hidden people that aren't being reported. And I kind of agree with that right now. And
I wish that if it were like Freddie's report, like we use the Freddie report just as a barometer for what's happening in the mortgage market as
right,
far as
because
rates
it's been
go.
going on for
Because
50
they use the
years.
same formula
For 50
week
years.
over week, right? And they probably have fiddled with it some, but
Mhm.
generally it's the same formula. The question is, when it comes to unemployment calculations, is the formula they use changing? And I guess it's got to be on a administration basis, but are they fiddling with the formula per administration to make their numbers look a certain way? That's the mystery part of
From
it.
being former reporter and having to cover this once in a while, like Bureau of Labor Statistics and stuff like that, and calling up those agencies and talking to them and everything, they have a set way they do that.
So it's consistent.
And it's also insulated a lot, supposedly.
Yeah.
Okay. Politicians, but supposedly it's insulated from the current administration that's in there. They kind of are like the wonks, that run the government, day to day, keep everything operating, and they do their thing. That's why, like Powell, a perfect example is like Jerome Powell, right? I don't know if people remember this, but when Trump was president and Powell was raising the rates in 2018, he was very vocal that he didn't agree with that at all, and he didn't want Powell to raise the rates back then. Powell continued to raise the rates. Why?
Sure.
Because his attitude was, I got to worry about inflation. I don't care about the administration. I'm worried about the longer pitch, individual administration. I'm worried about the long term.
Big picture.
Now he's raising rates again, 10 times in a row. And it's a completely different administration, right? So there's a lot of wonks. That's what people talk about. What do they call that? Like, the conspiracy theorists where they
Sure.
talk about the deep rooted or whatever they call that. What is it
Deep
called?
state.
Deep
Is that what you're-
state. Deep state really are the people that run our stuff day to day to make sure everything's running. And they call it deep state, but it really isn't a deep state. They're just bureaucrats. That's called bureaucrats. And they've been in there a long time and they know their job and they do it. Now, whether you're happy with their job or not, that's a whole different
Sure.
opinion.
Yeah.
And that's everybody's individual choice. But
I also think, but the leadership of these agencies is appointed in most cases. So when I don't think it's that much of a conspiracy to think that there could be some skewing depending on political, environment.
I wouldn't be surprised either, but it's not supposed to be that way.
Sure,
But
sure.
whether or
Oh,
not
of
it
course.
happens
And
that
you
way.
got to figure that
Perfect world.
Yeah,
there
yeah.
are both in the public and the private sector parties who are very interested in actual numbers, like real numbers. And so for them, you got to think there's got to be some place they can go to get real numbers. If we're not getting it in the masses, there's got to be somebody.
Well,
you know what I mean? Like there's definitely private
but
interests and
there's
public
so
interests
many-
who want
there-
real unemployment numbers.
But there's so many people studying these issues,
and maybe that's what we're getting. Yeah.
and I'm not seeing big inconsistencies or variances with what people are coming out other than what they're predicting what will happen in the future. That's a big thing, which we're going to get to in just a second. Let me just continue with a couple other
So-
factoids.
Yeah,
here.
but so far, to summarize what you talk about, so Fed raised it, but they've indicated maybe some slowing, and some people are predicting reversing of what they're doing with the rate.
Right. So some people are predicting that they're going to start putting on the brakes and actually reducing that bank rate, Fed Reserve rate. Some people are predicting that.
And even with the Fed bumps so far this year, mortgage rates have essentially
Flat.
been pretty flat.
We
Pretty
started
flat.
at
Little fluctuations here and there.
We started at 648, first week in January. This week, last Thursday, the report came out. We're at 639.
Okay.
We were at 639 2 weeks ago. We were at 635 last week. The week before that, we were at 639. So we're at 639. We're at 648 at the beginning of the year. We have gone down to, I think, as low as 6.09 this year. And we've gone as high as 6.73.
Sure.
But
More
we're looking at a
compared to
quarter
last year.
point.
Holy cow.
Yeah, we're only looking at a quarter point difference over the last 5 months.
Okay.
Last year was tremendous. We went from 311 all the way up to 7.08 twice, because we went down and then we went up again, once in July, once in November. So since November, we've been going down. And then once we hit that roughly 6.5, we've been kind of flat. So that's been pretty stable. Now,
And inflation is not quite cut in half, but dramatically down. Still some ways to go.
yeah, we have cut it. Well, yeah, you're right. Not quite in half. We were at 9.1. We're at 4.9 now. And
unemployment is historically low.
yeah, and people are making their mortgage payments and they're making their
Default rates way down.
right, default rates way down. So, and then there's all these studies that are coming out where people are saying that the economy sucks, right? No, don't get me wrong. Gas is high, food is high, right? Housing is high. So a lot of the things that you have to have in life, not like
Yeah.
luxuries, they're all high. So I get it.
Auto prices are high. Auto loan interest rates are high.
Yep.
So like your everyday
Yeah.
costs are high. Okay.
Your energy's higher,
Mhm.
right? Even though it's gone down a little bit from the peaks a couple of months ago, it's still high. Food is still high, even though it's been going down lower, rent is 8.1% across the country,
That's gotta be
8.1% for the year.
Ooh.
one of the big things,
Yeah,
right?
yeah,
Rent,
yeah.
I mean, rent is just
Yeah, it's
through,
crazy.
What about
no pun
alcohol?
intended, through the
Alcohol
roof.
sales.
I don't know.
Are
That
they-
should be very high too,
Booze
right?
is up there too.
Booze is up?
Yeah,
Yeah.
I'll let you- yeah.
So
I'll give
so
you that too.
so the thing is that unless people the last crisis we had, which was in '06, okay, we started, after Wilma down here,
Right.
was super high unemployment rate. Everybody started getting
Right.
laid off, and then it was just a slide downhill. It's like, I can't make my payments anymore, and then everybody got in trouble. Right now, we don't have any of that on the horizon. And the thing that I found interesting about this, study after study, for month after month after month, people are asked, how do you feel about the economy? And it's great majority of the people, 60 to 70%, say it sucks. But then they ask, how do you feel about your economy? And they go, pretty good.
Yeah, not bad.
That's the part that's
Mhm.
weird. So everybody's thinking they're doing okay, but they think the economy sucks.
Is that
And-
is zeitgeist the right word for that, Jim? Where it's like basically what are they being
The
told?
collective
Yeah,
feeling. It's
yeah.
just like a feeling, right?
Yes. And
And-
which could be coming from news sources. Like, let's be honest about that.
That's
You're-
exactly where
sure.
it's coming
Yeah.
from. It's coming
course.
from the media talking about we're going to have a recession. We're going to have a recession. And everybody's scared the recession's coming. It's been 18 months and we
Yeah.
haven't had it yet. I'm not saying we're not going to have it,
Yeah.
but we haven't had it yet. So everybody's been hearing about it for so long. Their mentality is up, it's coming, it's coming, it's coming. It's like, what is it, Lord of the Rings, where the winter is coming for Game of Thrones.
Yeah,
and
yeah.
you're waiting for the winter to
Don't
come.
mix those up, Jim.
Right? Yeah, I'm really
Oh,
bad
boy.
on all
Yeah,
that
they're-
stuff.
The dark side.
Yeah.
But
Yeah.
you know,
But-
the other thing too is you see the headlines and I don't think this is political, but Amazon lays off a bunch of people, Google lays off a bunch of
Yes.
people. There's been these big layoffs that we
The
keep
tech
hearing about.
jobs.
Burger King closing doors. So a lot of these chains that are closing a lot of stores down.
Bed Bath
Bed
and
Bath
Beyond.
Beyond, yeah.
Bed Bath,
And you
yeah.
keep hearing that, and you're like, well, how is the unemployment? When you
That's
see
interesting.
thousands and thousands and thousands of jobs that allegedly are going away. I mean, again, I'm going by the headlines. I'm going by what's in the news, and then yet here unemployment still seems to be historically low, as Mike says. And I'm not. It's
Right,
like,
right.
What do you
It's just-
believe?
I know
It's-
it's like what I talk about, like our price, our prices going down or not. I have so many people ask me all the time about their home values and is the prices going down or not? And I always say this now. I say it depends. Pick your reality. So here's the reality. In Palm Beach County, which is very similar for all the counties down to South Florida, the single family home average median sales price in March was $575. Now that's a 6.3% increase compared to March 2022.
Okay.
Okay, 6.3% increase. Pretty good, right? Average appreciation in Florida over historically has been 3 to 5%,
Right.
right? They used to say 3 to 4, but they've had such massive increases for so many years, it's skewing it a little higher. So 3 to 5%, 6.3, we're doing great, right? Well, July of 2022, the median single family home price was 620. 620 to 575, that's what, $45,000 price differential?
Mhm.
Right? Is that right? 620, 575, that's 45,000.
Yeah.
That's an 8% drop.
Was that the high of last year?
Yep, that was the peak. So that's an 8% drop of the peak, but we're 6.3% year over year. So which would you choose to decide? What's your reality? Hey, my house is up from a year ago,
Sure.
or I'm down from July.
Right.
Right? What do you want to do? That's your reality.
Right.
So both
What
people
about-
are right. That's what I tell people.
Yeah.
Whatever you pick, you're correct because the numbers are right.
What about last month?
We don't have it out yet. It'll come out next
No, but
week.
I mean the month prior to what'd you say, March?
Oh, yeah.
So what was February?
It was in the 560s to 580s.
Oh, so we were up from February.
Maybe. Maybe. I'm
You
not
could use
sure.
that too. So
Actually,
I could sell it
actually
more
could find
today than I could last month.
Sure.
To me, that seems
Sure.
like,
Well, there's short and long term trends, right?
yeah.
Do you go by?
So
Yes,
what's your
yes.
so if
And
I'm going to pin
I
you
would
down,
go
Jim,
through
what,
the my opinion is you always go with the short trend. You don't care what happened last year if you're selling your house
Right,
now. You
right.
care about what's happening in your market right now.
Yeah.
I went to 3 listing appointments this week, right? Hey, by the way, I'm going to be meeting Tom and Denise to pick up their listing. We met with them earlier this week. They decided to hire me. I'm coming after the show and go
Cool.
meet with them. They got a really nice 3-bedroom, 2-bath home in Lantana. I don't want to say the price yet because I want to go over the listing agreement with them, but it's going to be a really nice home. Really looking forward to selling it. And see you, Tom and Denise, in a little bit. But everybody wants to know what's going on with the property values like right now. And the way that I do it, he had another realtor come and look at the house before me. And saw some of the paperwork that they brought with them to do the listing. And what they did was they showed a high, a low, and a medium for the neighborhood prices.
Recent.
Recent. Well, don't even really know. They just gave a report. This is the high in the neighborhood, the low in the neighborhood, the median in the neighborhood. Not a lot of other information, a lot of pretty pictures and a lot of we're the best, but not real facts, right? When I sit down with people, what I do is I open up. Jimmy's seen this.
We just did it, about 10 days ago or
Yep.
so? You sat down, hooked up your laptop and said, okay, this is what's been going on for the past 6 months.
Right.
And here's, and comparing it to what you have and very specifically to what you have. Not like about a 3-4. No, you got a 3-2. Here's
Square
exactly
one car garage
Yep.
in this area.
getting very close to what you have. So it gives you a very good comparison and you can get a good solid number of what you're looking at.
So you're not cherry picking. You're saying here's everything that's sold in the last
Yeah.
amount of time that matches your house.
If I were thinking about selling my house, I want to know everything that's going on in the neighborhood, the bigger houses, the smaller houses, the trends, right? So I look at 4 things right away when I comp a property. Number 1, I pull out everything in the neighborhood. I pick out a geographic area and compare it to the house. And I put in very specific features of that house compared to the other houses. If the neighborhood's strong and I have a lot of choices, I can get very granular, which is great, right? If there aren't as many sales, I have to broaden it out a little bit, and then it becomes more of an art, not a science. But if I can get granular, Jimothy's neighborhood is a very strong neighborhood, so I can get very granular, specific, if you will, about what I'm looking for to compare to Jimothy's house. So I really know what other people are paying for and what they're putting on the market for, just like Jimmy's house. So we can really determine. So the first thing I show you is your competition. If you were to put your house on the market right now at this price, how would you compare to everything else being sold in the neighborhood? And where would your house land based on condition, size, and price? Right. Then the second thing I do,
And volume,
right. And
as you're saying.
yes. And
Mhm.
then I look at how many pendings there are. Now, hopefully, I'm going to see 10 pendings and 5 actives because
Okay.
that means that people are going to pick up that property pretty darn fast because they don't have a lot of choices. It also shows that the neighborhood is very popular because when properties come up, they're picked up, right? The houses are being sold. Now, the next thing I do is I look at the closed, but when I have a list of closed, I might have 15, 20 closed properties. So what I do is I usually only go back 6 months if I can. And then I do the most recent sale first. And then I start looking at the numbers for the most recent sale. House is on the market for 450. It sold for 435. This one was on the market for 515. It sold for 485. It was on the market 72 days. And
It's almost the exact way an appraiser
I
would
look at it.
look at homes.
I do. I
Yeah.
do it that way because why do it any other way? And it gets us great results. We don't sell low. We sell usually faster than other people in the neighborhood, and we get prices very close, if not as good or better than what we were shooting for because we had a plan and we were very focused and we have facts. Facts. I said it. I said the F word. We have facts to back up why we're doing it. If you have an agent just going, I think your house is worth 450 to 450 to 500. Okay. Your house is going to land somewhere 450, 500. That's a 12% variance, right?
Yeah.
50,000 on a 450 low. That's like 12% variance, right? It's like 12%. That's like
This is the
horseshoes and hand grenades, not darts hitting
this
a
is the point.
bullseye.
If Johnny were here, he would ask you to reiterate. He said, so the average home is selling at what percentage of the list price?
It's
Like
it's
90%
it,
or something.
well, it's all over the place, but right now about 94%, but it's all over the
And
place.
yours, Jim, your homes are
Mhm.
selling at what percent?
About 98%.
Yeah.
Yeah,
Right? Can you hear Johnny saying that or
Mhm.
asking that question? Because
Sure.
yeah.
he does that anytime you talk about this part of it. So
And we get great results that way. So you really got to know, you really have to understand um, your options. And there's a lot of people I sit down with. Two of the people that I'm picking up the listing are landlords, and they had to decide: is it better to keep the house and keep renting it out, or should I grab my profit now and
yeah,
move on?
it goes back to how the conversation started, which I think the question is, should I send that now or some point in the future? And you can't reliably predict an answer to that. Like, are you going to make more money in 6 months or a year from now? It's very hard to answer that question with any reliability. But what you can do is say, well, if you sell it now, here's what you can expect. And now with that information, you can say, well, how does that help you with the next step, which is probably buying, right? Or renting, right? And so you just
Or
gather the information so that you can make decisions, which is
and
basically
and
what we're about.
and we use the mathematical formula, Mike, that you know very well. So we go in and we figure out, okay, based on current sales and everything I just went over with you, we could sell the house. I'm making it up. I'll use the same number again, 450, right? And then one of the families I met with that was the landlord for that property, we figured out what they were going to net. Then we figured out based on their rental rate and assuming it was 100% occupied, that there was no downtime between tenants, that there weren't any major repairs, just your expected taxes, insurance, right?
Okay.
Not including a new roof or anything. In order to make the same amount of money as a landlord as just selling the house now and taking the profit, it would take 13.1 years of full occupancy rate to make all that money.
Yeah.
So then the person has to decide, do I want to take all the money right now and make the profit right now guaranteed, right? Pretty much guaranteed,
A
right?
known.
Right, known, right? Or project that I could do better over time with the property and hope that I have good tenants that are going to pay on time and they don't have any unexpected repairs. But that one person, the roof was getting older, right? It isn't super old now.
Sure.
It's fine now to sell, but if you keep the house another 5 years, you're probably putting on a new roof.
Okay.
Then I started adding, what would the roof cost? What would a new AC cost? Right? You add those in. How much would that take away from the profit that you're making every year? Right? Because if you put on a new roof and it's 15 grand, and you're making 18 grand in profit a year off the house, right? That you're only making 3 grand, right? So you figure all that out and like sometimes the landlords say I want to keep it. No, nothing wrong with that.
Yeah, because
Sometimes they say I want to sell.
if you hold, then not only do you get the cash flow through the years, but you also have the asset, right? Which you have to make some prediction like, okay, so it's going to take me at least 13 years to kind of break even if selling versus um, retaining it as an investment property. But then in 13 years or any point past that, you still have the asset which you can sell. So you hope that home values continue to increase or stay stable. If they go down, you're going to have to hold longer. So that's part of it too, right?
Yep, it's all so there's no what I always tell people, there's no wrong answer. I'll give you the information. You
Yes.
decide what you want to do, but there's no wrong answer. Just like pick your reality, right? You
Mhm.
pick your reality, you pick, do I want to stay a landlord? I like it. You know, there are other if Jarrett was sitting here from Perry CPA Group, he'd start saying, "Yeah, Jim, but you're not taking account depreciation and other stuff involved
Yeah.
that you get tax breaks from." And he might say it isn't as simple as you're saying, right? And you just have to there's no one right answer. Every
Yeah.
answer is depending
And
on the person.
and it's also hard to get it exactly right. Right? To be at the very peak, right? I want to sell at the very peak. Well, it's
It's a
very
lightning
hard.
strike.
Yeah, exactly. I mean, you can luck out and in hindsight say, yeah, I sold at a great time, or you could miss the window. I mean, Jim, you sold a home probably what, a year and a half before you could have made a lot of money in a year and a half, but it was right for you at the time.
We probably lost about a hu- if we knew what we knew, we lost about $125,000 in equity.
Yeah.
And the thing was when I sold that house, we were the third highest sale in the last 5 years in that neighborhood.
Yeah, so you
So I
sold
was like,
at a peak of the time,
yeah, at
Mhm.
the,
but you didn't get it exactly right. But guess what? It also allowed you to take the next step at that time, that point in the market. And had you waited a year and a half on that next step, you almost would have been in the same boat, right? Because
yeah,
housing, if you were buying, right,
because the
as a
interest
buyer.
rates would have been jacked up
Yeah.
so high and everything. And that's another thing that I'm seeing a lot with customers right now. They're all trying to predict, getting back to the economy stuff, they're all trying to predict this wacky market right now. It's a very wacky market, and trying to be a soothsayer to know what's going to happen to the market. I can tell you this, most of the people that had done that in the past from 2018 until today, because let me tell you, when 2018, when the Fed raised the rates and we got up to 4.99, everybody was losing their religion. I was like, oh, we can't sustain 4.99 for interest rates. The market's going to crash. All this stuff's going to happen.
Yeah.
Well, what happened? We had, according to national statistics, we had over 40. I can't even believe I'm saying this, 30 to 40% price appreciation across the board over 4 years, which is crazy town.
Sure.
And the interest rates went up. So
Mhm.
all those people sitting on the sidelines thinking they're smarter than everybody else and not being in the game, they really kind of hurt themselves in the longer term. They could have done better off if they had acted more quickly. And you're not going to be able to predict what's happening in the future. There's no way I know,
No,
because
but
this
if you
market's
could,
crazy town.
Jim, if you knew what was going to happen,
Mhm,
let's say we're on the down from a peak right now,
mhm,
and it's going to go way down.
mhm.
So then the obvious answer is you sell right now, and then you rent for the next X number of years, and you're waiting for the valley, right? And if we go back in time, that was basically 2006 to 2012. So you're going to be a 6-year renter under that plan
Well, not only that, the rent market is so crazy
and
right now.
paying those rents.
Yeah, I mean, I'm meeting people where one of my customers, even in the business world, it's like this. One of my customers is going from 2,700 a month to 4,400 a month for their place, right? Regular residential renters, I've seen people come to me just recently. They were paying 2,000 a month. They've great relationship with the landlord for years and years, and now it's going up to 28. Had another one, 2,000 to 3,200 a month, right? They can't afford it. Just no way.
Yep.
And there's no way to protect you from that. And a lot of times now there's a new law, I think, where you got to be noticed 90 days in advance if it's more than 5% increase or something. But that still doesn't give you a lot of time to go out and find a house if you're not prepared.
Well,
So,
especially if that's the market rent. I mean, it's getting raised because it's getting raised to a market rent. It's not like you're
Yeah.
getting price. They want to price you out. They're
right.
just like, hey, we can rent it for this much. So guess what? The market rents are going to be high across the board.
Yeah.
I'll tell you the other thing that's somebody should be thinking about. Let's say you're even predicting some sort of big downturn in the economy, crash or whatever. I don't think there is any appetite for mortgage default rates to go crazy. Right. And we
Right.
just went through this with COVID. Like what they very, very intentionally did not want mortgage defaults. And
Or
so
rent.
or
Even
rent
rent.
defaults. So
Yeah.
they basically put in laws to help people going through a crisis so that they weren't defaulting on their mortgages. And it really helped. And it maybe was even one of the causes for housing prices to go up or
Yeah.
for the
Feels so
inflation,
much.
right?
Right.
Well, inflation, yeah.
Yeah.
Yeah, but it just goes to show like there's not nobody wants, especially the big the big banks, right? They don't want default rates. They
Yeah.
want housing prices to be stable, normal fluctuations. They don't want people defaulting. They don't want to foreclose. So
So
take that into account.
So
Mhm.
with the economy, these are the things we're hearing. We're hearing some economists are predicting that things are going to flatten out through the end of the year, do so well that we actually start reducing the Fed rate and easing some of the pressure on mortgage rates and credit card debt. Other people are predicting right now that we're in some big trouble coming. And some people are predicting that the Fed is going to want to smash this inflation with the hammer. I just heard this week. It made my mouth drop. I think it came from a report from Zillow. Zillow came out with this very doom and gloom report, right? And they said if we default on the national debt, what's going to happen is that interest rates can get up into the double digits for mortgage rates.
This is related to the debt ceiling.
Yeah.
Okay.
And they're saying that that would be the thing that breaks the back of the economy. and that we would be looking at 8 to 10% interest rates for mortgages, which is crazy town compared to even where we are now. And then on top of it, they're thinking that that's going to cause a massive unemployment situation, and we'd be like at 8% unemployment. Now, I've been saying forever that unemployment is too low because normal, proper, you need to have unemployment. Unemployment is healthy because it gives labor a chance to move from job to job so they're not so restricted. When we were during the Clinton years, we had unemployment rates this low and people were freaking out that the unemployment rate was so low. And they were like, we got to get up to 4.5. We got to get up to 4.5. And people were wondering, how are we going to get to 4.5% unemployment? And now we're at 3.4%, right? So if we got up to 8, that would be double almost, right? Almost double of what would be considered a healthy unemployment rate. So if those two things happen, Zillow's predicting that we're going to go from 6 million sales a year, nationwide to 3.2 million a year.
Why do
That
we care about Zillow's predictions?
Well, I kind of up there with you, but it got a lot of media coverage. Now, the funny part is in the headline for the article, because I did read the article, right? Because I wanted to see what the heck they were saying.
Sure.
And the thing is, so it had the big headline, economy going to crash, if we default, blah, 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 and big, thick headline. And then the sub headline said,
Maybe.
although not likely, comma,
Yeah, 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 yeah.
if the debt ceiling, if the debt ceiling isn't dealt with, blah, 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 blah. So like
Well,
in the subhead, but they never mentioned it
course.
again in the article
Yeah.
that it probably isn't going to
I
happen.
mean, it's just like the
But
headline.
everybody's freaking out.
It's just like those headlines that came out with the LLPA changes, right? Like the
Oh, I wanted to talk to you about that. Let's talk about that again.
low credit borrowers get a better interest rate than high credit borrowers. That was the headline,
Right.
right?
Right.
Which would make you think, Timothy, well, great. Let me just make a late payment on my car, drop my score by 50 points, and I'll get a better interest rate.
Right.
So that's how headlines can get
Yeah,
misconstrued.
but let's talk about that myth because I read something after you talked about it again.
You want to talk about it now?
I
Or
want to
after
talk
the
about
break?
it. No, let's
Oh,
go.
okay.
Oh, is it 10:30 already?
Well,
No, we got time to talk about this. Let's talk about this, and we'll squeeze in hurricane season really quick.
Okay, because I still have people asking me about
Right.
that.
So what's going on? Because that's a big political thing right now.
So, okay, so let me preface the conversation. The headline, unless you like really read it, because you actually read an article and you
Asked
when you
about it.
asked me about it last time, I was hoping you would set me up with a softball,
Oh, sorry.
but you asked it in a way where I couldn't make it an easy answer, right?
Mhm.
So the headline was lower credit borrowers are getting better interest rates than high credit, right? So you have perfect credit, you're getting a worse interest rate than somebody with less than perfect credit. And so that's the headline. And the answer to that is completely on its face untrue. So you still get a better interest rate if you got better credit. No question about it.
I heard that the people with better credit were paying more
So then
to subsidize.
So then you get into that. If you line up the question that way, what happened is, so there's what's called loan level pricing adjustments, or what I call risk-based adjustments, meaning the higher the risk, there's a little premium you pay that Fannie and Freddie charges, and these are their charts, right? So little premium adjustments. So as an example, if you were at 800 credit, maybe there's for interest rate 6.5 doesn't cost you any points. If you're 700 credit, that same 6.5 interest rate, maybe it costs you a half a point. So you're paying a premium for the risk, right? You're riskier because you have lower credit.
Right.
So there's a whole chart based on credit score and loan to value, or your down payment percentage. And so they have little adjustments based on where you land in that matrix. And so what happened is the higher credit tiers, their premium was adjusted upwards slightly. So if you were comparing the old chart to the new chart and your credit score hadn't changed and your down payment hadn't changed, you're paying a little bit more premium in the upper tiers.
When you say a little bit more, what does little bit more mean?
Maybe an eighth of, maybe it was 0.125. This isn't
So-
on the interest rate. This is in points.
Okay.
So 7% cost.
So it's a one-time fee.
Yeah, it's a one-time fee. It's just like,
Okay.
how many points are you paying for the rate? The par rate would be no points.
Right.
So the same par rate, maybe it's call it 6.5, one day was no points, same credit, same down payment, the next day costs 0.125 in points, right? So a little premium adjustment, little points adjustment. So in the top end of the chart, the matrix, higher credit borrowers were getting penalized a little bit more than before. Old chart to new chart. Lower credit borrowers were getting penalized a little less. Old chart to new chart. Now they're still paying more for the same rate. The low credit borrower is still paying more than the high credit borrower
because they're still a higher risk.
But if you compare the old chart to new chart, they're not paying as much as they were before.
Could it be this much, Mike? I did $500,000. Let's say you're actually borrowing $500,000, right?
Okay. Yep.
And I times it by 0.0125 or 0.125.
So it'd be 0.125%.
So I times it by
0.00125, I think.
Zero, because I was going to say this comes out to
exactly. So go to $625. So
it's like $625 more you're paying than
for the same rate.
For the same rate.
Compared yesterday to today, right? Because the chart changed. So when you think about it that way, Jimothy, so if there's a total pool of penalties or points that people are paying across the entire matrix, and they've lowered the penalty for lower credit borrowers, then you could say that the higher credit ones, because they increased them, are subsidizing, right? So they basically shifted who's paying what. So the total pool has remained the same, but who's paying a bigger percentage of that pool? So the higher credit borrowers are paying a little more than before. Lower credit borrowers are paying a little less than before.
And there is a dollar amount to limit, right? As far as it only affects from a certain number up.
So there's an entire matrix where you have credit scores on one side and loan to value running across the top. So, credit score 640 and up at 20% down. And then 620 to 640. I'm sorry, I'm saying 740 and up, 720, 740, 700, 720, so on. And you run up and down that matrix.
Right. But isn't there a mortgage number amount like 500,000 or 700,000 as far as the mortgage value that it affects, or no? Did I misread that?
I don't think so.
Okay. I thought it was for higher ones.
So it's a percentage base. So it's like if you're doing a $500,000 mortgage, an eighth of a point is $675 or whatever you just had.
625, yeah.
Right. And if you're doing a $700,000 mortgage, that eighth of a point is going to be higher because it's a percentage of the loan amount.
Right.
But and those aren't the only loan level pricing adjustments that exist, right? There's also things like for risk. So if you're buying a condo, there's a little penalty for that versus single family.
Right.
If you're buying an investment property or a second home, there's a big penalty for that. If you have secondary financing, like a second loan, there's a penalty for that. So they're all in the matrix. Now, here's the other thing that the headlines never talked about, Jim, which is that new chart went into effect on May 1st, but lenders have been pricing loans based on the new chart for probably 3 months leading up to that.
Oh, before that.
Yeah, because what happens is you're talking about when loans are delivered to Fannie and Freddie. We call it delivered to agency. That happens after you close, and it's probably a month after you close.
Right.
So had we been using the old chart and then loans were delivered to agency on the new chart, lenders would have lost money.
I see.
Right? Because they would have been pricing it wrong. The LLPAs would have been wrong. And so lenders, of course, avoiding that at all costs, have been pricing based off the new chart for months.
Right.
And you don't notice it. Like you wouldn't know as a consumer. There's no way you would know. And so the headlines just got it kind of completely wrong. And I've been undoing the misinformation, with conversations. I actually wrote a paper on it, an article. But I guess the big thing is it's already happened, right? It's already happened in the market. Nobody knew anything about it until the headlines came out. And then it's like, whoa, what is this? But it was really kind of misinformation the way the headlines were reading.
It really is. Let me see. What time? Is it 10:31, Jim?
Yeah, it's 10:38.
Okay, so let's go.
Want to take a break?
Yeah, let's go ahead and take a break. When we come back, we'll talk a little bit about hurricane season, the Florida Talk Real Estate YouTube channel, because we got some good things going on.
Good.
And we're going to talk about contract writing. And I'm sorry, we're going to talk about loan approvals because that's so important in today's market. We've had a lot of problems with that in the last couple months. So we're going to talk about that.
All right. Sounds good. We'll be right back.
The Anajar and Levine Accident Attorneys Studios.
Have you been in an accident? Call Anajar and Levine Accident Attorneys at 1-800-747-FREE.
That's 1-800-747-3733.
Real Radio 92.1 is WZZR West Palm Beach, an iHeartRadio station.
Download the free iHeartRadio app for all your music, radio, and podcasts.
From the Gordon and Partners Weather Center. Have you or a loved one been injured through no fault of your own? Call 561-333-3333 or go to fortheinjured.com.
I'm meteorologist Jennifer Collins with CBS 12 News. A mostly sunny sky today as temperatures return to the upper 80s and lower 90s with a chance for afternoon showers and storms, mainly inland. An east wind between 5 to 15 miles per hour. A stray shower tonight, still warm into Sunday morning with overnight lows in the 70s.
This report is sponsored by Wendy's Strawberry Frosty. Hey, you! Run to Wendy's and grab a Strawberry Frosty. Don't worry about canceled plans. It's worth it, but act fast. Like your date, it's gone at the end of the summer. Head to Wendy's for a Strawberry Frosty and that sweet strawberry goodness. Limited time only at participating Wendy's.
Hey, it's your boy Johnny C here, host of Florida Talk Real Estate. They're tops when it comes to helping people buy and sell houses. But Florida Talk Real Estate is so much more than that. For 5 years, I've watched these guys help thousands of our listeners with any real estate need. They couldn't do it without their sponsors, who are experts in their fields. Check it out. Jim DePola, powered by Keller Williams Realty. Their team specializes in helping people sell their house for top dollar, and buyers get great deals on the purchase of their home. That's what they did for me and my family, and I couldn't be happier that I hired them for my real estate transaction. Mike Rauch from the mortgage firm is one of our favorite guests on the show, and he is the mortgage guy. Whether you're looking for a refi or a mortgage to purchase a new home, Mike Rauch will get you the answers you need. The mortgage firm is licensed to do loans in Florida, Alabama, Tennessee, and Georgia, and they have local offices that cover all of South Florida. So if you're thinking about a refi or a new mortgage, go to the mortgage guy, Mike Rauch, and find out what he can do for you. The Mortgage Firm, Inc., NMLS 189233, Florida license MLD 78, equal housing lender. The law office of Paul A. Krasker has been specializing in real estate law for nearly 25 years and has the professional team you need. Upside down with your house, Paul's team can help you conduct short sales, loan modifications, even if you're behind on payments. They also help you with foreclosure defense and bankruptcy. They can even help you get a student loan modification and repair your credit to get the score you need. Paul's full-service team has helped thousands of our listeners, and they can help you too. Trident Title LLC is the largest privately owned title company in Florida. When you need a title company to complete a refi, home purchase, or sale, Trident Title has got you covered. Not only do they offer competitive pricing, Trident Title has attorneys on staff to make sure if you have bumps in the road declaring title that you can get the job done. Beware, not all title companies in Florida have attorneys on staff. Trident Title does and complies with all the new federal regulations released last year. Ross Camaronets, owner of Brightway Insurance, has been helping our listeners get great rates on homeowners insurance plans. Haven't checked your homeowners insurance policy in a while? This is a great way to help reduce your monthly mortgage payment. Ross can also help with renters and auto insurance. Ross is only a phone call away and can usually get the answers you need same day.
Call Ross today at 561-425-6228 or drop by his office at 873 Donald Ross Road in Juno Beach.
So now you know why I'm happy to be part of the Florida Talk Real Estate Show, the longest running real estate show in Florida. And all these sponsors are just a phone call or a click away. Just call 888-973-7828. That's 888-973-7828. Or go to floridatalkrealestate.com. That's floridatalkrealestate.com. And don't forget to use the most accurate search engine to find your new home or ask for a free home valuation because floridatalkrealestate.com has you covered. That's floridatalkrealestate.com.
This is Real Radio 92.1 and 101.7. Real talk for the Palm Beaches and the Treasure Coast. This is Florida Talk Real Estate with Jim DePola and Johnny C. Got a question for the show? Call us live at 1-877-927-6969.
I hate it when the announcer lies and says Johnny C's going to be here and he's not here. I don't like that. Liar, liar.
didn't have time to record a new drop.
Yep, you're stuck with Jimmy D today. How are you doing, everybody? Happy South Florida. Didn't get to say that today. We've got Mike Rauch from the mortgage firm here.
Yep, in house. Hello.
We've got Jimothy, the producer extraordinaire, here today.
Hello, and good morning, gentlemen.
Good morning, everybody, and happy South Florida. Let's roll right into the next segment, which is hurricane season is near.
Uh-oh.
We're going to talk about this more with Ross next week. Ross Camarinas from Brightway Insurance, Juno Beach, the only office you care about when you're looking for property insurance or car insurance. Anything but life insurance, I think he says. Boat insurance, motorcycle insurance.
Golf cart insurance.
Yep. Any
Maybe.
kind of insurance.
How about just liability insurance for golfing? Because if you're like me, you break a lot of windows.
Do you have to have that?
I
feel like
should.
I feel like if you're on, maybe that's a good question. Somebody call in who's on a golf course community. I feel like your homeowner's insurance policy would cover damage from a golf ball?
I think there's a waiver. I think if you're on the golf course, there's some kind of waiver thing or something.
That you sign saying the players won't be responsible.
Yeah, I think so.
Unless they're intentionally doing it.
Just think of all the golf balls you get over the years, though, too.
Here's the thing, Jimothy. If you know you slice the heck out of the ball and you got houses on your right, are you obligated to do something other than your normal slice? Right? Like if you know the ball is going into a house, shouldn't you just like pick it up and move on down the line?
Yeah,
like,
well, and if not, why don't you just aim for the house?
Right?
If
you
know,
might
right?
as well just be pelting
going,
it
like,
right
let's
into the
just
house.
try to hit the house.
Now you're a golfer, Mike. If it goes to the right, it's a slice. If it goes to the left, it's a hook. If it goes straight, it's a miracle. I think, right? Isn't that how it works?
There's some nuance in there. So there's the fade and the draw, which are in there. So the fade is supposed to be like 10 degrees, 10 feet right of center, 10 yards or whatever it is. But some people say that's their fade when they slice the heck out of it.
I have two golf stories. One time I went golfing, and when I swung, the golf cart was too close to where I was.
Whoops. Okay.
And the golf club went through the roof when I was swinging back, and it went through the roof, and you could see. And then when I let it go, the top of the club was in the roof hanging, and the rest of the handle was hanging underneath the roof. That was not a good day when I had to go
rookie
back.
mistake there.
I was
parking
a teenager.
too close to your ball.
I
Yeah.
was only like 16, so you could forgive me, I guess, a little bit. But I also stopped playing when I was 16. I stopped playing golf, and you know why I stopped playing golf? Because it was too damn easy.
Yeah.
The first day I played golf, I shot a 141. And the second time I played golf, which is only that's the only two times I've ever played a real golf. The second time, shot a 120. I figured like 4 more games. I'm Tiger Woods. This
there you
game's
go.
too
Nice
easy.
shooting
I'm
par.
like done.
That's it.
It's like, knock 20 strokes off my game and one thing. This is way too easy.
Something
I don't
tells
want to
me
make millions going pro. Who would want to do that?
something tells me you were playing winter rules in that second round, right?
Best ball.
Yeah.
Yeah.
So
how does that relate to hurricanes? So
Well-
if the golf balls are pelting your home, it's almost like
yes, it's
Right?
almost like hail in the hurricane.
Yeah,
Nice
there we
segue,
go.
Mike.
So
Nice
here's
segue.
here's the thing.
Smooth segue.
The reason why I'm talking about this today is because Johnny hates when I talk about hurricanes during hurricane season because he says we're going to jinx us. So I figured I'd get this out of the way while he was gone.
I
'Cause they
figure
always
it's already here. We just had huge rainstorms come through the past 2 days.
2 days ago, the skies were so crazy by my house, and
Yeah.
I
Thursday
was
night, yeah.
talking to a customer, and I had to drive to where they were, and I was a little nervous because they said there was hail, and I was like, "Oh, I hope my car doesn't get too dinged up when I'm going over there."
Yeah,
Right, and
yeah.
luckily the hail wasn't around, but there's some pretty weird storms, and that gets us to what's happened in the hurricane season this year and El Nino. Does everybody know what El Nino is? Because everybody gets confused about El Nino and La Nina.
Yeah. Okay.
Yes, and I'm saying that with a total gringo accent.
Yeah, I think it's hard to mess those up. Though.
Yeah, El Nino a lot.
You could say El Nino.
Yeah.
That would be the way to screw it up, right? El Nino.
That's what I'm saying, El Nino.
You're saying Nino,
Oh, am I? Okay.
right? Am I mishearing him, Jim?
El Nino.
El
El Nino.
Nino.
Yeah.
Okay, so here's what the forecast is for hurricane season this year. We're going to get like 13 named storms. 6 real hurricanes, 74 miles an hour or higher, sustained winds, and 3 large storms. So that doesn't mean they're coming to Florida, just 3 large storms in our Western Hemisphere's area, I guess.
That's like the first number
That's
you
kind
said.
of average.
Doesn't that seem low?
No, it's kind of average. We've been at 13.
So that's their
predicted
prediction
storms.
is average.
Yeah, and they're actually thinking it might be less than average because right now we have a 60% chance of El Nino coming.
This is where Johnny would stop you and say, Jim, stop it.
Yes, but I'm going to keep going.
You're jinxing us. You just
going.
said it's going to be average or less than average. That's what he just
yes. And that's
That's
I
what
said
the
that's
headlines
what
were
the
saying.
national economists
Mhm.
or national hurricane people are saying,
Mhm.
weather people. Now, El Nino, while we might get less hurricanes, so that would be the good news, less hurricanes, right? Why would that happen? Because we're going to get a lot of rain, regular rain, and that's going to keep the waters cooler. And that means less powerful storms. And that's why. So, but if we do have an El Nino, we're going to have more storms, not hurricanes,
but less powerful.
We're going to have more flooding, right? Less powerful. No, they're actually going to be stronger, but less powerful than a hurricane, but stronger than a normal storm.
Okay.
And then we're going to have more flooding. And that would be El Nino if it goes that way. If we go to La Nina, that's not good because then the waters start getting pretty warm and then who knows what's going to happen. Now, the El Nino, if it does come through, because there is only 62% chance that will happen, if it does, it's 62% through July. So we could in August, September, be switching over to La Nina. I don't like that scenario.
September's
because that's
usually our
reminded me
worst
like
month.
Andrew and that kind of stuff where we get the big ones. So we'll see what happens there. There's a lot of changes going on with flood insurance. The reason why I'm not going into detail about it is we're going to wait for Ross next week.
Sure.
And there were some changes to the changes in the flood insurance. So I need to find out from Ross about that.
Change.
I think the big thing is they were going to make all condos unit owners, even if the condo
wasn't first floor.
building had flood insurance, that you have to get your own flood insurance, even though that you have flood insurance in the building. And I think they're scaling that back, but I'm not 100% positive.
He was talking about that a couple weeks ago, I do believe.
Yes.
And even if you weren't on the ground floor and things like that, you know,
Mhm.
it was like you wouldn't expect it if you're on the third floor, maybe that
Mhm.
you would need something like that.
So there's going to be some change to that. We'll go into that with Ross, but these are going to be big changes. You know, in 2027, everybody's got to have flood insurance, period. They don't care where you are. If you're in a flood zone, not a flood zone, what are you shaking your head about? Do you think they're going to change it?
No, what I read is that only Citizens insurance policies are going to be affected by that.
Did
So
not know
only,
that.
only people who are using Citizens as an insurer, which heck, by 2027 could be everybody.
Yeah.
But
True.
I think this flood changes are in effect for Citizens policyholders.
I doing the research on this story, there's 1.2 million policies written for citizens insurance in Florida right now. 228,000 of them are mandatory flood insurance policies.
Yeah, and so these change, and Ross is going to have all the details, but it has to do with whether you're currently in a flood zone or not, and when your policy went into effect. And then it's going to increase through the years to eventually all citizen policies, regardless of your flood zone, will require flood insurance. Now, the price of that flood insurance, like if you're not in a flood zone, may be relatively cheap. And I think like Ross has talked about voluntary flood insurance right now, which a lot of people opt to have just to be on the safe side, but it's relatively inexpensive for an annual policy.
It did take quite a bit of a hike, or at least it did for me.
Oh, yeah?
That I will say.
And yours is voluntary?
Mine's voluntary, yeah. We're not in a flood zone. And I started doing it, a few years ago because it was, dirt cheap.
Yeah, it was less than $1 a day or something.
Yeah,
it was like a couple $100 a
I think
year.
it was $311 when I first got it for the entire year. It's but I think he was talking a couple weeks ago. It was like in the $700 for the year for flood insurance if you're not in a flood zone.
So it still may be worth it for the peace of mind.
I think it's worth it because,
Yeah.
like, if you have the problem, so you blow the $600. That's what, like, a Starbucks a day for the year, right, or whatever.
Right.
And if you need it and you don't have it,
Yeah.
oh, not a good day.
I'm glad I have it.
Yes,
I mean, I
it's
certainly
worth having
it is. It's a peace of mind thing.
Now, if you're really conservative and you live in like the 6th floor of a condo, are you going to get your flood insurance then?
Yeah.
Right? Like,
yeah,
it's just one of those.
Yeah.
Like, that's what you're talking about. Like 6th floor condo. You sure you're going to need flood? But yeah,
Well,
so
what,
there's
what,
changes coming down there, and I don't know what the premiums are how they're gonna shake out, but yeah, something to consider. Like the whole "Are you in a flood zone?" I think is a changing environment as well. Like, are you actually, like you say, we're not in a flood zone. What you mean is I'm not in a flood zone that requires
right,
mandatory insurance.
right.
So you are in a flood zone where it's like once every 500 years.
Yeah. Well,
Right.
and yeah, hey, that'll change too.
Yeah, and of
Correct.
course
You know.
that's all changing. Of
Yeah.
course, that's
Bef-
but
Before we get into loan qualification stuff, because I really want to talk about that because it's a real thing that people don't understand well enough. I wanted to talk just very quickly about our Florida Talk Real Estate YouTube channel. It's called Florida Talk Real Estate LLC. And if you go into the video section, you're going to see all these shorter videos. They're anywhere from 1 minute to 5 minutes long. And we're putting out 5 or 6 a week. And they're talking about real life great tips that we talk about on the show where you don't have to listen to us for 2 hours and still get the great information. So don't forget to go to Florida Talk Real Estate LLC on our YouTube page. And please like and subscribe to it so you know when the videos are coming out. And if you have any questions related to that, all you got to do is give us a call at the floridatalkrealestate.com website. You have all the different ways. You can call the 800 number. Did you know our 888 number is 24/7 live, where you have a live operator taking down your information and then alerting us that you've called, and we call you back as soon as we can if we can't pick up the phone directly. You could also do the chat with Jim, where you can make an appointment on the calendar to talk to anyone on the team, Mike or Ross or anybody else you want to talk to. And all you got to do is to chat with Jim. This week, we had 2 people that went to the law office of Paula Krasker for legal issues. We have people call us for insurance questions. We got, a couple people called that wanted to buy, and we got them over to Mike. And we had some people that were calling to think about selling their property and they weren't sure. All of those things can go through that 888 number or just do the chat with Jim live and set up a half hour or less conversation with me to figure out how we're going to be able to help you. And we'd love to give you that advice. So that's it with that. Now, let's talk about loan approvals, Mike. We haven't talked about this in a while. And man, maybe it's just buzzard luck, but a lot of sloppy stuff's been going on with the people that have been giving us loan approvals. And I can't believe some of these agents walking around giving us the loan approvals they're giving us. I'm going to give this one example.
and you're talking about the pre-approval letter.
Yes.
Okay.
So let me just ask you the first question, okay? Because everybody said they use this interchangeably. Is there a difference between a pre-approval and pre-qualification?
Yeah. Yeah. So I would say the pre-qualification means I've talked to you, we've gathered information, but I haven't verified your information. Meaning I haven't reviewed pay stubs, W-2s, bank statements. So we talked about it. I got the information. Based on that, you should be qualified up to this
So
payment.
it could
this,
be as
this
simple
purchase
as
price.
this. You're the mortgage broker. I'm the customer.
Yeah.
So, Jim, how much money do you make? I
Yes.
make 80 grand a year.
Yes.
Okay, great. Click, click, click in your computer. Hey, let me pull your credit score. Oh, you got a 780. Great. Click, 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 click. You're good for X amount of dollars. Here's a pre-qualification
Go
letter.
shop.
Pre-approval letter,
Yeah.
right?
Pre-qualification. So that would be the pre-qual. So
Okay.
yeah,
And
very risky.
Loosey-goosey.
I would say it's risky for everybody involved. It's risky for the buyers, risky for the agent, risky for the listing agent, risky for the sellers. Like everybody involved, it's a super risky stamp of approval.
And then pre-qualification.
So that's the pre-qualification.
Oh,
so
pre-approval, I'm sorry.
no doc review.
Mhm.
Pre-approval would be I gather all your information, or you provided it somehow, and we've reviewed the documentation required to verify that information. So Jim, it's as simple as taking your information to fill out an application, and then how do I verify that information? So the pre-qualification is I don't verify that information. I just kind of take it on its face. The pre-approval is I've taken the information and I've requested documentation so that I could verify it. Very simple example. You told me your name is James DePola. Driver's license, verifies that that's your actual name.
And then the
Right.
80,000 I said I make a year, right?
Yes, pay stubs, W-2s.
Right.
Or if you're
you
self-employed,
find out
tax
that I'm
returns.
self-employed
Yeah.
because that wasn't figured out in that
Sure.
first conversation.
Yeah.
Which is a very big deal.
Right.
So,
Absolutely.
and that's what happened to my last 2 buyers. Now, they weren't my buyers, because if they were my buyers, we wouldn't have went through this.
Sure.
Okay, but, I was taking listings, I had 2 cases, a property in Singer Island, on the Intercoastal, and I had a property in Royal Palm Beach. And the property in Royal Palm Beach, the person was a Canadian resident who was coming down here. He had dual citizenship, but he was coming down here. He owned a trucking company in Canada.
Okay.
You remember this person. He owned a trucking company in Canada, but he sold the business and he didn't own it anymore. And he was coming down here to start a real estate career, right? And he got a pre-approval. And the way he got and he had significant amount of money and he had a decent credit score. And he felt like there wasn't going to be any problem at all for him to get a loan, and I knew there was going to be a problem. So we went back and forth before we took the offer, because the numbers were really good on the offer. Like, the sellers wanted to take this offer, but I didn't think he was going to be able to close based on the qualification background that the mortgage companies he worked with gave him. And I kept telling him that, but he was not only the buyer that I'm talking to, but he's representing himself as the agent. So I kept saying, I don't think you're going to get this loan. I don't think you're going to get this. Oh, you're crazy. You're crazy. How can I not get this loan? Then the next thing you know, for 2 weeks, I can't believe they're asking me for all this information. And and Mike knew, we actually got him over to Mike for a second opinion, knew there was going to be problems. We did jam it through. It was so expensive for him. He paid so much money to get that loan.
He had to switch to a style of loan that didn't require any of this documentation.
And it was super high interest rate with a huge down
Sure.
payment. And his attitude is, I'm just going to lock into the house and then I'll refi at some point, which maybe we should talk to him. We should give
and
him
listen,
a call.
if that's the plan, there's nothing wrong with that. The problem is it wasn't the plan.
No,
it wasn't even plan C, or like they didn't have a plan A.
That was a
a
Hail
mystery.
Mary pass. It was literally a Hail Mary pass, hoping I can get this through, because he went through 3 or 4 mortgage companies now.
And the thing is, you're a seasoned agent, and you saw the red flags, and you tried to address them the best way you can, and you get whatever insurance you can. And like, at some level, you felt comfortable saying, "Okay, I guess let's proceed." Right? Like, this is a good offer. Let's cross our fingers and hope that he can come through on the financing.
And things kept changing. Now with the other property on the Intercoastal, that person also was coming from out of state. She had the same career, but in a different state. And she was a dual citizen, Britain and United States. But she had a business that she ran out of state, like in Wyoming or Montana or something like that.
Yeah.
And then she was moving here and she was getting a full-time job down here, plus continuing her business that she had in the other state. But then we found out, because they didn't do the vetting, that she said she was getting a job down here, but she wasn't licensed in Florida for that job, which means
No
the
income.
employer couldn't say that, yeah, you're hired yet, because she had to pass this exam. So everything got screwed up with her. And just like the other self-employed person, and being self-employed is hard. When look at Jarrett, we talk about it all the time with Jarrett Perry CPA. You really have to do extra stuff when you're self-employed to make sure you're going to get that loan, including me when I go to buy my house later this year. I'm going to have to go through the same thing. And that's why I started working with Mike months ahead and said, hey, how much money do I need to buy the kind of house I want? You told me what my income requirements were. I went back to the accountant, Perry CPA Group, and say, this is my parameters. I need to have this as a minimum, because this is the kind of house I want to buy.
Yeah. And that's also, we're basically saying, okay, Jim, if everything stays the same on your debt side, here's the type of income and you'll qualify. Now, if something were to change on your debt side, if you went out and got a second car, you went out and doubled your car payment, or you got a boat, right? Or something like, or even maybe you paid off your car, right? Those things would change. So you kind of like, you work on, here's what it should look like, but it's kind of up to you to make sure that things stay stable from a debt to income perspective.
So here's my script when I sit down with sellers. And the reason why I'm bringing up loan approvals, last week, 2 people out of the 3 people I interviewed, and I say the same thing to them all the time as sellers about mortgages and what to worry about with mortgages and be cognizant about. and 2 of them just dropped their mouth because this is my script, okay? I'm gonna do the
Okay.
script.
Let me hear it.
Okay. So, in our listing agreement, I'm asking you, Mike, as the, seller, to give me permission to ask the buyers if they have a loan approval for financing to get a second opinion from the mortgage firm, Mike Rauch from the mortgage firm, to make sure that they're really qualified for the loan. And I say, we can't by law require anybody to use Mike to use the loan. We're not asking the buyer to use Mike. We're asking Mike to give a second opinion to make sure that they really can get the loan. Because I know, and I'm still using the script, I know if Mike tells us he can get the loan, then I'm going to tell you, I feel very comfortable that they use whatever loan officer they want, loan company they want. Because if they can't perform, we could always slide back to Mike and get the job done.
Sure.
Because if Mike says it's good, it's good,
Right.
right? In 8 years, I think we've been working together, Mike. Not one time did Mike tell me, not once, in hundreds of deals, has he told me that he can get a loan and not get it. So then we know we're good. So then I say, so when a person comes to us and they have a loan approval and it's from the big box banks, I'm not going to mention them, but you know all those ones that are out there, right? The Wagon Wheel Company, the one with the red, white, and blue logos, all of those, all the big box banks. You really have to be careful with pre-approvals for them. You have to be really concerned about those companies out there that say that you can plug in your information on a phone and in 5 minutes get an approval letter.
Very
These are
very
not,
risky.
and then people are like, well, what banks are left? And we're like, direct lenders are the ones that are most likely to perform the best. And then we start getting into that. I know we're running out of time here, so we're going to get into this a little more next week.
Yeah, and I'll just say, like, it doesn't mean you can't do a loan with those companies,
Right.
right? It doesn't mean you can't do that.
Of course
but
not.
Number one, you want to get your offer accepted so that you know listing agents, or at least the sharp ones, are looking at your pre-approval and saying, wait a second, where's that coming from? Are we going to close? Right? Very important. Are we going to close? Do you feel comfortable? But secondarily, you can talk to me, and at the end of the day, you can choose whatever lender you want, but you need somebody who's actually looking at, can we get to closing, to give you some level of comfort that you can actually do this thing. It's not about looking at homes. It's not about finding the right home. It's not about getting into contract. It's about doing all that and closing. And if you're not closing, holy cow, what are we doing?
Yep, exactly. Well, Mike, thank you so much for holding the fort down with us on the short staff. Jimothy, thank you so much. I hope you have a great show on the locker room coming up.
Yeah, got Greek and Joe in the bullpen right now, so we'll be talking some sports. Very exciting down here in South Florida sports right now.
With
do they have a name?
With the Panthers and the Heat, both doing very
They're
well.
both doing great, but that Panther game, when I read it in the paper, 4 overtimes, that's crazy
6 hours.
town. Awesome, man. Awesome.
I think it got done around 1:45 a.m.
Yeah.
So, yeah, we got that coming up right here on Real Radio, so don't go anywhere.
See you next week. Happy South Florida.